How's the market? The market's weird. So real estate is local, and these days it's hyper local with wild variations from town to town or hamlet to hamlet even. So let's get into it. We're talking about the residential real estate market in Columbia County, New York. Let's take a look back at April before we talk about where we are today. So the median sale price in April dropped to 421,000, which is down 20.5% from April of last year and down 159,000 from March. The median sale price year to date is 475,781, which is down 10% year over year. 34 homes sold in April, down slightly year over year, and the number of homes sold year to date through April is down 6.8%. There have been 138 homes sold this year through April versus 148 for the same time period last year. 84 new listings hit the market in April, which was down 2% year over year, and year to date, the number of new listings is down 3.6%. The total number of available homes on the market year to date is lagging behind by 6.7%. 48 homes were placed under contract in April, which is down 9.4% compared to last April. And year to date, the number of homes going under contract is down 7% year over year. To date, this month, 34 homes have already gone under contract. So we may be seeing the tide shift a little bit as we move very slowly into the peak selling season. But overall, pending sales, closed sales, and new listings are definitely softer than we saw last year. Let's look at days on market. So the average days on market in April was 115 days, which is 11.7% increase or 12 more days compared to last year, but a decline from what we saw in March. Year to date, the average days on market is 117 days, which is up 23% year over year. Days on market tend to contract during the peak months as buyer activity picks up, but it's very likely that we're going to continue to see this trend of longer days on market this year compared to last year. When we segment by price range, we see the following average days on market. So you have 600,000 and below. That segment has an average days on market of 73 days. And then you have 600,000 to 999,000. This segment has an average days on market of 124 days. And then you have over a million. This segment has an average days on market of 153 days. So under 600,000 is definitely the fastest moving segment. It has the broadest buyer pool and the strongest demand. Between 600 and 999,000, that's a transitional market, and buyers are much more selective in this segment, and financing sensitivity definitely increases. And then over a million is considered the luxury market. This is a much smaller buyer pool, longer decision cycles, and pricing precision, definitely becomes critical in that price range. The sale price to list price ratio was 95.3 in April, which is down 1 point from last year, but flat to March. This year, 46% of all homes sold saw a price reduction before they ultimately sold. And the average price reduction that was taken before selling occurred is 11.7% discount, let's say. In the homes that are currently pending, we see an average price reduction of 8.5%. And then as deals close, we're seeing that the average close price is really only down 8% below the original asking price. So this is the true market correction from the original seller expectation to the final buyer agreement. Under 1 million homes that required a reduction took twice as long to sell and reduced their price by 10% on average. And over homes over 1 million, they took 3 times longer to sell on average and ultimately reduced their price by 22% on average. Homes still sell if repositioned correctly, so overpricing creates a substantial but recoverable delay. In the fastest moving segment under 600,000, we see that the sale price to list price ratio is 98% year to date. And this price segment is not immune to price reductions. So the ratio to the original listing price is 93.7. This is about 3 points higher than the total market number. And after reductions or repositioning, buyers are still paying close to the asking price. So, depending on the town or hamlet, we're seeing a lot of homes in this price range definitely sell very quickly. And that's just because the demand is high and the number of available homes is so limited. So, coming out of April, there were only 4.77 months of inventory available. This is down 6.5% compared to last year. Technically, anything less than 6 months is considered a seller's market, but it's not that simple as we dive deeper and look at the segmented market. Okay, so fast forward back to today. The median list price today is 649,000, and there are currently 259 homes on the market, and that includes homes with accepted offer that have not gone under contract yet. Unfortunately, we are still seeing the number of available homes today lagging compared to a year ago. So where are all these homes? What price point are they in? Where are they? Well, 104 homes or 40% of all homes are sitting between 200,000 and 599,000. This is where 58% of all sales have happened year to date. There are 67 homes or 26% of all homes that are sitting between 600,000 and 999,000. This is where 19% of all sales have happened year to date. And then we have 72 homes or 28% of all inventory is sitting over $1 million. And this segment has only seen 17% of all sales year to date. So now you can clearly see how the different market segments are operating. The core market, which is below 600,000, has an inventory problem. Homes are selling faster than new inventory is hitting. And the transitional market is turning slower, but it's a little bit more balanced. And the luxury market inventory continues to build and has a much slower turn rate. So there are many micro markets all over the county, and activity varies wildly from town to town. Generally, we are seeing the areas that have more available homes in the core market are very active versus the areas dominated by the higher price point and luxury homes that are seeing less activity. This map right here shows all the homes sold in blue and the pending home sales are in orange. And the most active micro markets dominate the northwestern quadrant of the county. This is most likely driven by primary home buyers versus second home buyers. And we know that primary home buyers tend to be largely motivated by things like school district, proximity to amenities, and commute time. So let's talk about mortgage rates. So we are seeing the highest rates in 9 months, but rates today are still slightly lower than what we saw 1 year ago. The war in Iran has been responsible for essentially all of the 0.65% jumps that we've seen in mortgage rates since March. And here's why. Mortgage rates are based on bonds. Bonds hate inflation. The higher fuel prices associated with the war imply more inflation. Thus, higher inflation equals higher rates if all else is equal. So inflation and higher rates are absolutely impacting home buyers' decisions right now. Now, with rising costs across the board, buyers are much more cautious looking at not only the mortgage rate because that impacts their monthly payment, but they're also looking at utility and maintenance costs as well as taxes and homeowners insurance costs. They're really looking at the entire expense package that comes with a specific home. And they're much more specific about what they need in their next home. That's why condition and presentation matter more than ever when you're listing your home. So let's wrap it up. I threw a lot of data at you and your head may be spinning. So let's summarize and talk about how these market conditions impact you. So how to succeed in this market if you're selling. Sellers need to be realistic about their initial pricing. Sellers who overprice initially often see their home sit for upwards of 150 days, leading to a stale listing and requiring at least one price adjustment. Sellers should also prepare for a longer listing period. This can impact your finances and lifestyle, especially if you've already purchased your next home and are carrying two homes, or if you're still living in your home and need to maintain it show ready for a longer period of time. How do you find the opportunities as a buyer? Well, buyers should know that they have leverage, and that leverage grows the longer the home that they're looking at has been on the market, or as they move up in a price range towards the transitional or luxury segments. But if you're shopping below 600,000 in one of the fastest turning micro markets, you need to be prepared to act quickly. There's a shortage of available homes, and conditions of these homes vary wildly. So you may not find something that checks every single box. Make sure you're pre-qualified and that pre-qualification or pre-approval letter is updated. And if you're using cash, you want to make sure that you can quickly pull updated proof of funds. You still have negotiating power in this segment below 600,000, but you cannot write a legitimate offer if your finances are not in order. So if you're interested in finding out more about a specific micro market that you happen to be living in or that you're interested in purchasing in, drop a comment or send me a message and I'll be happy to give you an individual report.